And I'm also joined by my trusty colleague, Forrest Mao, from our Shanghai office. He's obviously representing our amazing global sales trading team. So as always, everything that we cover on the call is very much solely views and opinions. These should not be taken as trading, no investment recommendations, no matter how enthusiastic or passionate I may come across in regards to kind of a view. So looking at kind of last week, as we've basically seen, ever since we got the Trump tweet, I think it was May 5th, May 6th, Asia time, there's just always been so many kind of different kind of moving parts. Let's maybe work backwards from an asset class perspective, and then we'll just kind of touch on sentiment, politics, and of course, the state of the U.S. kind of China affairs. From a volatility perspective, those long vol had a decent week, up about 11 kind of percent, getting just a little bit south of that kind of 20 handle. Majority of that move happening Friday. A lot of things last week were very much kind of shaped by Friday on commodities, huge sell-off on the energy kind of side of things, especially with oil, but still seeing, as we flagged, and Ola has actually done a fantastic job of this, squeezes in some of the softs that I think some of these may be entering kind of back-to-back kind of weeks up, likes of coffee up kind of 12%, likes of sugar, and to be honest, these have all been kind of off of my radar as I've been kind of focusing on a few other things. There's just so much kind of going on in the market, and I think also maybe surprising to everyone as we see global growth continuing to kind of decelerate. We saw the misses on PMIs in China last week, but we are still seeing, iron ore, for instance, being kind of bid up. And we also did see actual a very, very strong week, first big strong week in gold that I can remember in a very long time, up 161 kind of basis points. The vast majority of that basically also happening on Friday. Moving on to FX, very much yen and Mexico peso story. We'll get on that shortly. Big move on dollar yen on 120 basis points. This was something that was very, very high conviction, and I may have spoken to a few of you, those of you that at least have access to GST and our strategists. This was a very, very interesting day, which we'll get into kind of shortly. And if you look here at the Mexican peso versus the dollar, huge move in dollar mex, up 250 kind of basis points. What was interesting was you look at stuff like the real, actually the complete opposite, big strengthening of the real. So you can imagine crosses such as the rand versus the peso, the real versus the peso, how potentially overextended, but at least very magnitude kind of moves that you only see every few years, I would argue. So always interesting when you see things like that to put it kind of on the radar. On the fixed income side, my mind continues to get blown away, especially having a long-term kind of structural view, but the magnitude and speed with which yields are falling and bond prices are rising just continues to completely floor me. We did start that Asia Friday, I think, where Bunds had closed minus 17 basis points, and I was saying on the chat that based on the Trump tweet and everything, that we'd definitely be above kind of 20 basis points, and that was that. And we went from, I believe, we had closed 221 Thursday night on US 10s, and Friday close was, close to kind of 10 basis points lower. These are really, really big moves in bonds, especially also considering kind of treasuries and how liquid they are. If you look at USBs, which is 30-year US bonds, they're 256. I mean, this was where we were with the 10s just a few months ago. So quite stunning, the development there. I still remember when we were talking about Aussie 10 years at above kind of 2%. Here we are at 145, so on and so forth. Equities, obviously bloodbath in the sense of Europe and the US. Again, majority of the moves happening that kind of Friday. Interesting to see some of the outperformances. Jakarta, Indonesia, India, again, continuing same kind of story last week, and then also the outperformance on kind of Chinese equities as we are basically recording this 8:40 Singapore, Hong Kong, Shanghai time. We're down about 50 basis points on S&P futures and about 61 on the NASDAQ kind of 100, and it's looking like a pretty poor open in Asia as a whole. Nikkei futures down about 73 bips, which is going to be really interesting to see how the rest of the day goes. But with that said, the Kospi is actually up 60 basis points. So it'll be interesting to see how the rest of kind of the week plays out. So the divergence is always interesting to watch. Market sentiment, I would argue, is the same thing that we've said before. We've gone from basically being a flood of bears to an absolute storm of bears. View, I would argue, consensus-wise, and potentially positioning-wise, even though I think maybe positioning maybe less so, is things to get worse before they get better. So again, more to come. The U.S.-China tone turned down last week after turning up the previous week. So we basically seen chatter of China potentially coming up with this list of U.S. companies. They've launched an investigation into FedEx, but that also seems still to be tied to Huawei, with maybe some parcels that were not, let's say, delivered. We also are hearing hints of this rare earth weaponization that we were talking on Macro Monday quite a few weeks kind of back, would even flag the ETF. And then we've also seen different hints from the U.S. and potentially other kind of companies. It's interesting to note on the political scene that Trump forced $8 billion of military sales to Saudi Arabia. This basically allowed him to bypass kind of Congress. And again, this is raising the escalation of potential conflict or war with Iran in the Middle East. Now, it's worth noting whether he's taken a page out of Bush, who basically sparked a war previously with Iraq, managed to kind of use that to ride into the second kind of presidential election. It's actually a really brilliant strategy if you're on team kind of Trump, or if you're the one that's speaking to him kind of about it, not only just because wars or conflicts tend to be kind of inflationary, but also because they tend to attract a lot of kind of the limelight. And again, it's hard to criticize a wartime president, irregardless of how they kind of went to war. With the also added caveat, like I think the Democrats now have 26 candidates, or just something ludicrous. There's probably one of them on this call at the moment. So all of these are playing out. If you think about Trump, he's commanding the limelight through the Middle East, through U.S., China, definitely now through Mexico. He surprised everyone by putting 5% tariffs on all Mexican imports coming into the U.S., and he's tying this as less of a trade issue per se, but more of an immigration issue from the south of the border, where he's saying the Mexicans are not doing enough or as much as they could, which is obviously sounds politically savvy and looks great for his kind of base as a whole. The chat over the weekend is actually the Mexican president has been pretty kind of conciliatory in regards to trying to find some kind of negotiation or pathway. This, however, does not seem to be something that's probably going to be solved anytime soon, and it looks like it could escalate in the sense of we could get up to kind of 25 kind of percent. So it'd be interesting to see what needs to be seen by the Trump camp, if you will, what needs to be proved. Is there a timeline around that, or if it's something that could be done kind of much sooner? But for all you cross-asset fiends out there and global macro kind of investors, and those of you who like high-yielding EMFXs and kind of the demographics and long-term story of, let's say, a place like Mexico, this is definitely something you should follow. Initial kind of thoughts now, and based on everything I know, we potentially still have a little bit more kind of to go. It also depends what's happening in the rest of the market. I was actually expecting dollar MEX to touch 20. We were, I believe, off the top of memory, maybe 1903, 1905 on the close from kind of Thursday, and just had a massive roaring up session in Asia, and then that much more once kind of the Americas kind of came in. But this could be something that could come back very, very sharply, i.e. peso kind of strength, nice kind of carry. The tougher part maybe of that puzzle is figuring out what you want to be short on the other side. I would prefer stuff like, let's say, the euro, for instance, as I think there's still a lot of issues there, or maybe stuff like the SECI, but just kind of food for thought, because it pretty much got hosed across the board and kind of everything. And again, bear in mind market sentiment, right? Because it's just getting worse to worse, and that always means it can get very, very interesting from having maybe now and then little points of having a counter kind of contrarian kind of viewpoint. But of course, you need the catalyst for it. So for those of you in my mailing list or my Bloomberg chats, or even if you're on Twitter, this was the stuff that I was sending out early doors Friday morning. They're a little bit kind of delayed because it's, obviously it's phone calls first, and chats and mails, and then all of the kind of works to kind of get this out. But this was basically what was happening as it kind of played out. This is not chest thumping exercise per se. I think what I really want to illustrate here is, we've had some pretty tough weeks, at least for the tactical side of things. For the long onlys out there, those with much more structural longer views, obviously, it doesn't really matter. But these opportunities do come up, and the moves that we saw on Friday and continue to see basically can equate to 5, 10, 20, 30% returns, and I'm talking about that on your entire kind of capital, right? And the whole point here is these openings do occur a few times a year, and the trick I think is staying alive for them, not cutting up your fingers on lesser kind of conviction kind of trades, and just when they do present themselves, moving with maximum conviction and sizing as well, because that's also another element that I think a lot of people miss. So spoke to a lot of clients who this resonated with them, and especially dollar yen was just really fascinating. The Mexican crosses obviously moved very, very quickly. And anything over 100 basis points, I would argue for Mex crosses in Asia is a big move, because obviously the spreads go out, and the margins are obviously more intensive. But dollar yen was pretty much for that session hanging on forever at around kind of 109.40, 109.50, before turning around and closing at 108 kind of 30ish kind of levels on Friday. So an absolute fortune in killing. Could be made. And this is the kind of opportunity. Is that you know keep me passionate about kind of global macro. And um, make me um, oh, was working towards improving. Quickly, caught there's not too much in regards to kind of overall change on dollar position positioning about %. Net long increase uh, you can always kind of come back back on the replay of that actual deck. I'd spend a little bit more time.
Especially on the trade talk. front. So unfortunately, this uh, recent development are not
had this is a weekly chart. I think what's significant